Hello and welcome everybody to this fabulous event called Profit Playbook Live, Forex Futures and Stocks Edition. Juan, Neil, and I would like to welcome you to this event. This is something that we haven't done before, and I think you're going to find it very, very interesting as you see the expertise from Juan and Neil unfold in today's Forex session. And I'll explain in a minute. First, let's read the disclaimer to ourselves. Thank you. This week's event schedule is as follows. Today, we're going to talk about Forex. And actually, Juan is going to do analysis, followed by Neil, back to Juan. They're going to analyze several markets today and go back and forth so that you can see the Elliott Wave perspective from Juan and the Wavy Tunnel Pro perspective from Neil. I am really excited to see this as well. Tomorrow, we're going to cover the futures markets, and Wednesday, we're going to cover the stock markets. So now, without further ado, I'd like to turn it over to Juan, who is going to start with his analysis. Enjoy.
Thank you, Judy. That was fantastic. Today, traders, we are going to check some setups that we were following during the New York session after this complex weekend and a lot of volatility and a huge gap that we got at the market open yesterday. So here we have our main wave count. We were looking for the end of the second wave, this second wave in orange that we have here, and the plan was looking for that completion of the second wave. When we have a strong leg, when we have a strong move like this one with the gap and this strong leg down here, usually what we look for after the strong move, it's some sort of a wave forward, some sort of price slowing down, and then the next leg, and from there is where we usually have a good reversal. But sometimes, like today, the market can build the reversal without that additional leg down. So this is the V-type reversal and is quite difficult to trade. But as we are going to develop this storyline today, this is possible to trade when we combine the wave count and the wavy tunnel tools to find those validations. The price sell-offs aggressively and then it starts slowing down. We have some tails showing that the price might start doing something sideways to start building something at this area. But still, when we are right there in the live market, we can think about the return to the mean. For example, the price was moving down too fast. But I find this here a little bit hard to trade. But when the price starts moving up and we have the wave one, in this case, the wave one blue, now we have other hints that the price might continue higher because at least we have the first leg up. Sometimes traders, when the trade is not too clear, like in this case, we might want to wait for the first wave. So let me explain how we can do this in terms of Elliott wave. So we have a leg down. You are trying to find the end of the move. Sometimes, of course, when you don't have a divergence, when you don't see a proper accumulation, let's say, it's hard to jump into the trade going against the fast price going down. So one hint, one tip to do this is waiting for your first impulse. And when you have in front of you the wave one, now the storyline is different because then you are going to look for the second wave, the test of this 5-wave sequence. And right there is where we can start building the narrative of the reversal. Usually in the wavy tunnel, we have here a breakout 2 trade on lower time frames, of course. And when we have all the setup for the second wave, that's where we can trigger. This type of trade is easier to trigger at the retrace rather than trying to fade the trend when we have all these fast price action on the left. Now we are going to look for the lower time frames, and we are going to make the exercise on lower time frames at this corrective wave. We're going to make a deep analysis here on the lower time frame to see how we can find the end of the second wave. So even traders on complex days like today, we can find some good trades. Let's move into the 5-minute chart, and this is what we do every day on the live markets, this analysis. So let's move here into the lower time frames. So here on the 5-minute chart, let's add here the MACD. I'm using just a regular MACD. We can use the MACD or the awesome oscillator and to find the momentum. And let's focus here on the second wave. Okay. I believe, and Neil will help us to explain this better with the wavy tunnel tools, but I believe that this is an interesting setup because we have the 3-wave sequence, the ABC. This is during the New York session. We are talking that this leg happened between 8 and 10 a.m. EST. The price moves down and we have the zigzag, the ABC. A, B, and C, a 3-wave sequence. On the MACD histogram, we can see the price losing momentum, which is going to help us to understand that this is corrective because the wave 3, let's suppose that at that stage, we are not sure if this is an ABC or a 1, 2, 3. So the histogram losing momentum is a good hint that this could be a corrective wave. But there is something else, traders. I like to trade. I like to find the levels. These levels in the Forex market are very useful. This is a simple technique that I like to use. And it's using the 00s, the 25, the 50s, the 75, and the 00s again. These are key levels. These are key levels where we can find liquidity. So let's add those levels quickly here. We have here the 25, sorry, here the 50, right? That's our 50. Let's add the 25 here. And let's add the 75. Okay, so that easy. When you are going to start your trading session, you can add these levels to your chart. This is going to help you a lot. You can use those levels to book profits or to trigger trades accordingly to the wave count, and of course the combination that you make with the wavy tunnel tools as well. But look, here we have the price hitting the 75. And instead of having a successful breakout, because there is a rejection, the price sell-offs and it tries again, but this time we have a tail. And also the oscillator is losing momentum. So we can see that the 75 is having trouble. When you find that the 75 is the price is having some trouble there, and the price starts selling, the next level that you are going to check is the 50, right? So from the 75 travels to the 50, and then again at the 50, you are going to start seeing how the price is acting. The price comes to this area, to the 50 area, 102.50, and as we can see, tiny candles, and then a powerful green candle that closes above the 50 area. With this close above the 50 area, that could be our signal. So we can trigger that rejection of the 50, and soon you're going to see how to do this with the wavy tunnel as well. But let's suppose that we trigger there at the close of that candle on the 5-minute chart, and we can set the risk 1 or 2 pips below the low of that candle. That will be the risk. So we have a tiny risk right here. Then the price starts moving up, and you know that the next level that you are going to check is the 75. What happened at the 75? The price breaks up without having any trouble. So when that happens, the next level that you're going to watch is the 03. The price breaks out the 03 as well in the same candle, okay? So the next level that you're going to check is the 25, the 103.25. And as you can see at the 103.25, we are having troubles. The price hits the 25 and rejects. So that could be the profit-taking signal. So we can travel easily from the 50 with a tiny risk to the 103.25 based on the wave count and, of course, reading the momentum and using these levels as a reference points where we can look for the rejections. So that's the day trade that we have for the New York session today. Now Neil is going to explain how to validate this plan using the wavy tunnel tools.
Thank you, Juan. Very good. Before I start, I'd just like to say that although this is a session based on looking at Forex charts, what we teach applies to any instrument. Stocks, indices, commodities, it doesn't matter. These rules apply just the same. So we're going to look at the same charts, but now we have the Wavy Tunnel Pro template applied to it. And you can see that we not only have the awesome oscillator at the bottom, we have a band of lines here which looks complicated but is not. It's really easy to understand once you know what's going on. And we have these diamonds, which are the ends of trends. The blue trends are very small, the red trends are slightly bigger, the yellow trends are bigger than that, and then the ones with the grey arrows, and then the biggest ones we look at are the ones with the purple arrows. And all these stack up on top of each other. So underneath that red, for example, there is a blue, and down here underneath this purple arrow is a grey arrow, a yellow diamond, a red diamond, and a blue diamond. So just gives you the basics there. We also have the wave, that's in these purple lines. We have the tunnel in black. We also show the tunnel from the next time frame up, just because that's useful. And we also show this line down here, which I think is a green, and that's called the wavy tunnel filter. And they all have significance. And what I use is high probability events. In other words, one pattern will, in the main, lead to another pattern with a very high probability. It doesn't fail often enough for us to worry about it. And another principle I have is you won't miss an entry on these trades. It doesn't matter, once you spot a trade, it doesn't matter where you go in. The important thing is where you put your stop and to limit your risk. So the further away your stop is, the smaller the trade is, the nearer the stop is, the bigger the trade is, and the more money you can make. So having said that, let's now look at this Euro USD chart for today. And there was that big drop that Juan talked about. We won't go through any of that again. And you can see on this chart, there are some lines that have been drawn. Those have been drawn by the software, not by me. And they have significance, which we'll come to later on. So we've reached this bottom, and I'm looking for clues that we've come to the end of the trend. And one of the clues is a big candle with a tail on it, if it's at the bottom. Let's zoom in a bit and have a look at that. And there it is. It's got a big tail on it. And as price is coming down, as Juan mentioned, I'm looking for divergence. I'm looking for the awesome oscillator or the bungees here to tell me that the move down is weakening. And you can see on this chart that we had a lower low on price, but this black bungee has a higher low on its value. And that's giving us divergence, and it can happen on the bungee strands. On this channel, it can happen on the awesome oscillator. Once you have that, you're then looking for a 1, 2, 3 reversal on the right hand side. And in this case, we had a move up, and the black bungee took off and came up this far. And then we had a move down, and the black bungee came down. We're all the way back to the bottom, but price did not make a new low. So that's what a black bungee failed snapback. The black bungee snapped back to the other strands, but price failed to make a new low. So that's a failed snapback. It's another word for a 1, 2, 3 reversal. It's another word for a possibly an Elliott wave 1, 2 waveform, and we expect a 3 after that. Who knows? Yeah, it could even be part of a harmonic pattern. But when you get that and price starts taking off again, divergence on the left, 1, 2, 3 reversal on the right, that is an excellent indication that you've come to the end of the move and price is going to go the other way. If you miss that, well, there will be other opportunities. Okay, so now we have the same thing again. We have a move up. Whoops, let me get the right drawing tool. We have a move up to a blue diamond here, a move back down to a blue diamond. One of the things, I can't teach you everything I know in this short session, but one of the things we know is that if the black bungee reaches the top of the channel and we get a blue semaphore, price is going to reverse. If the black bungee reaches the bottom of the channel and we get a blue semaphore, price is going to reverse. Maybe not that candle, maybe the next one, but maybe the one after that. But the point is, at the top here, it's not a good place to go long, and at the bottom here, it's not a good place to go short. It's to be ready to go in the opposite direction. And you can see that if you obtain the Wavy Tunnel Pro indicators and you go back and look, you can see that every time there's a blue bungee, actually that one comes down to there, and then that one is that one. Yeah, and then that one is that one. You can see there's a link. So you know what's going to happen. It'll be a small reversal, a correction, or it will be a complete turnaround and a move in the opposite direction. But I would never try and enter a trade on this chart because there are too few candles, and like Kwan says, it's a good idea to move down, and in this case Kwan moved down to the M5, so let's do the same thing and have a look at what the M5 has to show us in terms of Wavy Tunnel. Now this was a big fast move down and the response was slow coming back up here. But we have a move here up to that yellow diamond there that would be what we call a price to wave trade. Sorry, my apologies, I've misdrawn that. Up here is a price to wave trade. Price has moved into the gap between the wave and the tunnel. The next thing we expect is a retrace back below the wave and a continuation. Excellent. But there are other clues in here that we're going to go higher. And those are this yellow bungee. We're only looking at the yellow, has moved right across the channel to the top. That tells us that we're going to move. If that happens, we're going to obtain at the top side a grey arrow, what we call a noble. And if we don't have it, yet, then we know we can trade long in this case until we get it. So all we have to do is wait for this reversal back down for the, and in this case, the lower yellow diamond. I wonder if we can still see that bit if we move out again. Bear with me a second. If we zoom back in, can we still see that bit? Yes, here it is. So there's up for the yellow for the price to wave. Here's the retrace, and here's the continuation. Now, once again, we're seeing divergence. I always look for it, and it's on the bungee. We have a lower low on price and a higher low on the black bungee. So then we'd actually look for a 1, 2, 3 reversal, but there isn't one. But we have other options. Well, first of all, we know we have a matching pair of diamonds. We know that we have an upper yellow and a lower yellow. So we're likely now at some point to turn up, and that divergence gives us a clue as to when it might happen. If we don't have a move up and a move down, if that does not happen, and Juan alluded to that in his presentation, then there are other things we can look for. For example, we can look for a move of price above the filter line, which happened just there. Okay, that tells us we ought to be thinking about going long. So long as our stop is down here, it doesn't matter where we go long. Doesn't matter where we go long until we get that upper grey arrow that we're expecting. The high probability was that when the yellow bungee moved up to here, we knew we were going up for a grey arrow. So until we get it, there are long trades with a stop down here below the yellow semaphore. And it really doesn't matter where you go. You've not missed the trade. Trading is really simple, really. If we're going long for a noble, a grey arrow, a noble, and it hasn't happened yet, then we've got a long trade. That's all you need to know. Now, the later you go into the trade, the bigger the stop, the smaller the trade, and the less profit you'll make, but it would still be a profitable trade. That's all that matters. Obviously, if you got in down here, we've got only a small stop and a bigger trade and more profit. And as this moves up, we might find that that grey arrow arrived here and then moved to the right and then moved to the right again and again and again, and eventually it settles at the top. So we have clues. Another clue we might have, and I'm not going to go into too much more detail because it's not actually a training course, but and I'm really skimming over it. But you can see here, from this yellow at the bottom here, as price went up, the red bungee reached the top of the channel, just the red at that point. And that tells you price is going to go higher for a red semaphore. So if there's a retrace, you can buy it for the red. By which time the green bungee's got to the top and you know you're going for a yellow. And we knew we were going for a noble anyway, but those are the clues we get. There are all sorts of clues here. So a Wavy Tunnel Pro price to, get that drawing tool again. Price to wave from the bottom that's off the edge of the page, retrace below the wave, and this is the fill the gap trade, which eventually ended up with a royal semaphore. And that's just the way the market works. And when you learn to recognize the patterns, that's all there is to it. All you have to do is observe. There's no extra drawing to do. There's no calculations to do. You just observe the clues in the indicators you're given. And that just takes a little bit of work, memorizing them, getting them bedded into your brain. Once you can do that, you can make consistent, profitable trades. And that's what's happening. So now, very briefly, from this top, look what's happened from this top. The green bungee has come below halfway here. The green bungee has come below halfway down the channel. That tells you the very high probability of this continuing lower for a yellow diamond. Okay, so once this retrace up is finished, we need to be selling it for a yellow diamond. That's what's going to happen next. So you can see that by learning the clues that come from these indicators, you can see the future. And if you can see the future, you can make money out of it. So I'll hand it back to you, Juan. We can have a look at the next chart, see what else comes up.
Thank you, Neil. That was fantastic. So we can see how powerful the wavy tunnel pro system is, because the wave count can be validated and you can improve your confidence around the setup by adding those great tools that are pretty objective when finding your triggers. Okay, so now we're gonna have a look at the Aussie. The Aussie did something similar, but slightly different. The gap, the opening gap from yesterday, that was impressive, is quite the same, is similar. However, the Aussie was able to travel a little bit more than the euro. We got a little bit more of distance from the gap to the low. The price did a significant move after the opening gap. And then the same storyline. We started to have some tails happening here, quite difficult. After the fact, of course, is easier. And of course, with the wavy tunnel system, you can have more confidence. But I believe is something that when we are in the live market, buying this low is not an easy task. But then when the price starts trending the other side, the other way, we can start planning the trade for the New York session. And let's make the same exercise here. Let's add our levels. So the first one will be the 61. Then the 25. This is simple and powerful, traders. So you need to try this tomorrow when you are going to trade the market. Make sure to add these levels, are extremely important. 50 and simple to use. Then the 75. There we go. And let's add the 62 as well. So we split each point, let's say from the 61 to the 62, each 100 points, we split them in 4. Okay. So what else we start seeing here? Okay, so the New York session starts and everything. We already have the wave 1. It's a similar case as the euro. And the price builds this retrace that we can see with small candles. The range of the first candle shows that the price is trying to go down, but is not being too successful. So the first candle, the first red candle here, let me zoom in so you can see this better. Let me adjust here my chart. Okay, there we go. Okay, great. So look, this first red candle, it's supply that is hitting the market. However, it's not an aggressive supply because the range of the candle, it's pretty small, that candle. The next candle also, it's a small candle, is not an aggressive red candle. So we can start from that point saying, okay, that's interesting, because the price is going in a corrective wave with corrective candles. And that comes to this important topic when we are looking for the corrective wave in the alleyway theory. We should look for tiny candles. We don't want to buy a second wave when you are seeing a huge candle against you. But when you're seeing small candles, is a great confirmation. And we are getting closer to the 50 area that we know that is a level. That level, we are going to draw the level before the market starts. So it's something that we can have as a reference point. We know that if the price breaks down that level, if the price is successful by breaking that level, the next level that we need to watch is going to be the 25. But in this case, as we can see, this first candle that hits the 50 area leaves a tail and starts having trouble at that area. And we are going to check that price action on the lower time frames as well. Also, this level is where the previous wave 3 finished. So, of course, we have another confirmation on that 50 area that's something important. Also, if we look a little bit more to the left, here, we can see that yesterday the gap, the opening gap, almost ends at the 50. Like this gap almost stops at the 50 at that area. And we can say, okay, that's interesting, but look at the upper tails. And the upper tails are not a bullish signal. The upper tails are actually telling that supply is quite strong. And the next candle here, this one here, breaks down the 50 area. So we are likely to move back to the 25. And on the 25, we have another breakdown. As we can see, this a strong red candle here. The green candle couldn't close above the previous candle, so it's still bullish, still bearish. And we come to the OOs, where the market rejects with those tiny candles, right? That's something interesting that happened yesterday at the opening. And let's come back here to the area that we were focusing today in this day trading example. So that's the New York setup for the session today. Let's move into a lower time frame, into the 5-minute chart, to start looking for the details. Okay, so the price sell-offs, we can add a channel around this corrective wave to get a better sense and to have some levels. And the channel, we can use channels as a volatility to have an idea of the volatility of the wave cycle. And when the price drops and hits the lower side of the channel, we start, and also we are near the 50 area, we start seeing the prices stopping. So there is this green candle that starts telling, this is a hint. This is, I don't think that this is a buy trade yet when we are at that stage. This is just a hint that something is happening, because if there is not liquidity at that area, what is more likely to happen at that area is to have another red candle, another successful candle, another supply candle, right? And the price can follow through at that area. And we will say, oops, no, the price successfully breaks down the 50. We got the breakdown of the demand line from the channel. And this is something that the price is not reversing from, that we don't have anything. But when the price goes sideways at the area, so that would be the next thing that happens here, you can start thinking, okay, so there is something here. I think the euro trade was easier than this one. This one was more tricky because we didn't have the rejection of the level as we did have it on the euro. So here, at least for me, is kind of, I have to be careful, because it's not too clear at that stage what to do. The euro was, of course, better. And then the validation candle is this monster that, of course, we're not going to buy here. That's too much. And in this case, I would prefer having the green candle closing above the 50 area, and not only above the 50 area, also above this last red candle that was the supply side of the trade. So let's imagine that we have here a smaller candle closing above this area, and I would prefer something like that to trigger the trade coming back to the 75. Right? We know that's the next level that we need to watch. If the price breaks up that level as it did, we can go to the next one, that is the 62, right? So we have some elements on this trade, however, a little bit tricky and difficult because this validation candle, it was huge. Probably by going to lower time frames, let's make the exercise. If you are a 1 minute chart time frame trader, of course, it could be a little bit easier to trigger the trade. But still, you know, that candle is huge. Still, on the 1 minute chart, where is clear, in this case, where is clear to me that we are going up is after this candle. So we can have some elements before, but at least for me here, the validation is at this candle, and that's like, of course, too late. We are always trying to trigger with the smallest stop loss possible to improve the risk reward ratio, and this is too much. But that's the setup, and it's quite the same as the euro. So now Neil is going to give us the point of view of the wavy tunnel, and you are going to see how the wavy tunnel is going to make these entry points and this exercise even easier.
Thank you, Juan. Okay, so yes, so I don't want to repeat what Juan's already said. It is very difficult to see what's happening here going up, but we have our clues. And let me get my annotation tool back. There we go. And from what I said previously, there's a candle that broke above the filter. So that's a potential buy, but we know with the black bungee at the top, there should be a retrace. So you might be going up here, price might be running away with you going up here, and you're waiting for a retrace to get in, and one doesn't happen. And that's always very difficult. But one thing you have to bear in mind is you are not obliged to trade any particular chart or any particular instrument. You have a whole host of different time frames and different instruments to find trades. And if it's proving difficult because of the way the market's working, don't see it as a challenge. Just see it as an exercise in patience, and forget trying to trade anything that's too difficult to trade. Now, there are the clues here that are the same as they were on the that we've already been through. There's the red bungee crossing the channel. So at that point, we knew we were going up for a red diamond if we didn't already have one. Yeah. Here, the green bungees crossed the middle of the channel. So we were going up for a yellow diamond up here. And again, that happened. Nothing much else to say on this 30-minute chart that we haven't seen before. Let's go down to the M15. And I'm interested to see, sorry, the M5 is where Juan was. I'm interested to see the bottom here. That's why I've marked it. because once again, and I'm going to zoom in so you can see it more easily, stop it scrolling automatically and just come along here so we can see in greater detail. And look, you've got the same thing again. You've got a lower low on price. You've got a higher low on the red bungee. You've got a higher low on the awesome oscillator. And then on the right hand side, you've gone up for a blue, down for a blue, started going up again, and there's an entry on the 1 minute chart with a really small stop loss at the end of the move. And then it just keeps going, slow and sure. At this point, the green bungees come up from the bottom, so you know you're going higher for a yellow semaphore. Yeah, at this point, the yellow bungees come to the top, so you know you're going higher for a noble. And you can just stay in. Now, as price to wave fill the gaps go, this is not a particularly good one. It is there, but it's not easy to read. We did go up into the gap between the wave and the tunnel. We did retrace, but it didn't come down far enough to go back below the wave. And we did eventually reach the tunnel, price to wave fill the gap, but not easy to read on this occasion. Okay, so just very briefly then, we'll keep moving along here. And I want to show you yellow, blue trend lines. We draw a trend line between yellow and blue. When we break that, we're going to go for a yellow on the opposite side of price. And there it is. So there's the trend line, yellow through blue. When we break it, we're coming down for a yellow. Here's the trend line, yellow through blue. Difficult because it's the big candle that Juan pointed us out to. And you really ought to wait for candle to close. But nevertheless, when we broke that trend line, we continued for the next yellow. There is not a yellow-blue trend line up here because there's no blue diamond. Okay, but you can see that and you can follow that, thinking that's just another way of knowing what's happening next. Okay, here, right now, what's going to happen next is I can trade short and I will make profit depending on how big the spread is on any particular chart. But this is coming down for a red diamond. And I know that because on that candle there, and you can see the little arrow that's been automatically printed on the chart, telling you we've broken this trend line and we're coming down for a red. So far, the red bungee hasn't confirmed it. But if the red bungee reaches the bottom, that will be confirmation of the same trade. So this isn't going to go higher, not yet. If you were looking for a buy, you wouldn't do it yet because you know you're coming down for a red. Now, you can make a note on this chart and you can see what happens in the next few minutes. See if that doesn't actually come true. And then you'll begin to realize how wonderful it is to be able to see the future. Now we only have about 10 minutes left, so that's all I'm going to say on this one. Do you want to do another one, Juan?
Yeah, sure. Let's do the last one. Let's go to the. Let's have a look at the dollar yen. So let me.
Okay.
Share here the screen. Okay. So that was great. As you can see, the wavy tunnel is pretty powerful because you can get the wave count, you can get the idea first, and then with the wavy tunnel tools, you can validate what you are seeing with a precise and pretty objective tool to confirm that actually that is happening. So here, traders, another example, probably my favorite for the session today. There are many elements that we can check about this price action of the dollar yen, completely different to the price behavior that we were seeing on the others. So here, traders, again, we have the levels. So I added the 00s, the 25, the 50, the 75, and the 00 area. And as we can see, we have here a wave one. So this is our wave one, and then the wave two. So let's go through this step-by-step process on the lower time frame of seeing how we could find the end of the impulse and how we can find the end of the second wave that is developing on the current market. So yeah, let's move directly to the 5-minute chart. And first of all, traders, as we can see here, we got at the beginning of this session, we were talking that it's easier when we have, after the wave three, after the significant move down, that leg that tries to reverse but fails, and we have another fresh low. This 3, 4, 5 sequence is one of the most powerful setups that you can ever find, because it's clear that is the wave 5, and it's clear that we need to be ready to find the end of that wave 5. Usually for the beginner, it's quite difficult to know where precisely is the end of that wave and how to trigger. And of course, there are many questions, but don't worry. We are here to help you into that process and give you all the details that you need to have to improve your entries, to have tiny stops, and to trade with confidence. Here during this wave 5, as we can see, the price approaches the 154, and the point is that you are ready for finding the end of the wave 5. That's your bias. You know that you're in the wave 5 because you have been developing the wave count before, and you know that at any time this is going to reverse. And that's where you can use the awesome oscillator or the MACD, whatever you prefer. I have here a MACD, and with the wavy tunnel, we use the awesome oscillator, and Neil is going to show you the application at this low as well, with the bungees and everything. But look, we have the price losing momentum. That's crystal clear. And when we have the price losing momentum, the probability that we are getting to the completion of that wave is huge. So one of the things that you can consider when you have a setup like this one, because you don't want to fade the trend, right? You don't want to start buying here and buying here and buying here and having lots of stops during the road. Or if you are not using a stop that you always need to trade with your stop, of course you could be in real trouble, because you don't know if the next candle, the next red candle, is going to collapse and is going to move 200 points more to the downside. So okay, so how we can, in an easy way, how we can find the end of that wave 5? Well, watch the high of the candle that already closed before. So here is the high of that candle when it closes, and you can buy if the price moves above the high of that candle. Did the price move above the high of the candle? Nope. It's a clear no. So I didn't trigger during that candle. Great. The next candle, when it closes, here is the high. Did the next candle move above the high of that candle? Yes. So we can trigger above, we can start moving our buy stop orders at the high of the previous candle. And the one that triggers, of course, we're going to leave the protective stop loss. In this case, we can leave it 1 pip below the 54. So it's quite good for the day trade. And we could very easily get to the 50, that is the next level. And once we come to the 75 and we see all this trouble, of course, it's time to book our profits. Sometimes the trader wants a specific target. And of course, with the wavy tunnel system, you can have also some targets like the wave, the tunnel, especially when we are far from there, from the wave and the tunnel, and we are trying to come back to them, or a higher time frame one. Those levels are extremely important as well. But the point traders is that you don't know, like nobody knows. And probably the most important skill that you need to develop and you need to master when you are trading is to understand when to close your trade. Because if you are too greedy and you don't book partial profits, or you don't close your trade when you are seeing trouble during the road, then you can lose what you already did. And the market can move. These markets are risky, and the markets can move really fast in any direction. But when you start seeing the tails at that liquidity area of the 75, also is the previous wave 4 area, so you have another reference point, close your trade. You already did like a 1-to-2 risk-reward ratio trade here. So that's it, right? That's it. Okay, then the B wave develops here. So we have the 3-wave sequence for the B wave, pretty calm. Usually during that afternoon, between the lunch time, around 12 to 1:30, that part of the session is quite slow. And finally, the price moves back into the previous high, hits the 55, and from there, again, starts showing troubles. And we have the rejection. Okay, so there we have the next hint. If we like it, we can sell it. Or if we didn't book profits here, that's our last point of exit. And then traders, let's talk about the setup here, because I really like this one. So we have, we are in the test. So here is our first wave. We can call it wave 1. And we are in the process of having the wave 2. I like to wait for the 3-wave sequence. That's something that I prefer. It's easier because you have a reference point, right? So we can wait for that. And let's suppose that we were trading that we were right now at 8 a.m. or something like that. This rejection plus the price moving below the low of the previous candle, that's something that we can try as well, right? Not always we are going to have the ideal zigzag ABC. Sometimes for waiting for the perfect setup, we can miss the trade, right? So this is a great example, traders, because this is a reversal. And imagine selling there at the 75 and leaving a 5 pip stop loss. And that's the risk, right? And the next level that we need to watch then will be this one here, right? Of course, we're not going to day trade at 4 p.m. This is just an educational idea. This is what we do every day in the trading rooms. But just to give you an idea of how to validate those levels. And if you say, nah, that's tiny, I need a little bit more of a price to the upside to have a better discount, that's fine. But at least you know how to start jumping into the trade without fading, without going against the trend. So this one looks really good. And now Neil is going to explain us with the wavy tunnel Pro system, how we can understand this better and how we can find those triggers.
Thank you, Juan. I'll be as quick as I can. The Now, I'm not an Elliotian. I'm not like Juan. I don't get anywhere near Juan's standard of wave counting. But I do know Elliott wave principles, and I do know how to use them. I do apply them in my trading. So when it's appropriate, that's what I do. Here we have a typical situation of wavy tunnel, which is the price to wave fill the gap we've already talked about, which happens at the end of a trend, where price moves into the gap between the wave and the tunnel, retraces back below the wave, and then continues to the other side of the tunnel. Price to wave fill the gap. Now, you might not be good enough to get into the trade on this first leg, this A leg. Or, well, it doesn't matter if it's an A or a 1. Yeah, what follows is a B or a 2, and what follows is a C or a 3. And the difference between a C and a 3 is just the length of the move. Okay, so you don't need to be, you can be a little bit like me, where you know Elliott wave principle, but you don't actually have a wave count. So for me, the trade for this one is here. It's the C wave, or the wave 3. It's the breakout 2, if you like. It's the start of the impulsive wave. I've missed the start of the first impulsive wave, and I wait for the start of the next impulsive wave. Okay. Now, there are clues here that as to what's going to happen, that have been automatically been removed by the software, because the targets have already been met. So there was a trend line through there. You'll have to take my word for that. And on break of that trend line, right there, we'd a very high probability of continuing up for a red semaphore. Now, I can't remember this earlier on in the day, but if that was not yellow, then the green bungee coming up to the top tells us we need to go higher for a yellow. So we know that after this retrace, we can trade long. And sure enough, there it is. There's the yellow. There's a red underneath it. Easy peasy. And just in the brief few moments that we have left, I'll tell you what I think is going to happen next. No, sorry, I won't tell you what I think is going to happen next. I'm going to tell you what the chart tells us is going to happen next. Price has moved across the wave and the tunnel. Therefore, we're going for a lower yellow diamond. Here, the green bungees crossed the middle of the channel. That tells us we're going for a lower yellow diamond. Yeah, this trend line coming up here has been broken here. That tells us we're going down for a lower grey arrow. So you watch this chart in the coming hour or two and see what happens. You could sell it so long as you stops covering the spread above the previous yellow or the previous grey arrow. You'll have a winning trade. You haven't missed it, you just haven't got in at the best price, that's all. But that's what should happen next. And then I want to just mention that in the trading rooms that I host, we do this over and over and over again until you get it. We go through all these high probability events. There's another one on here which is my favorite, where we start with a royal and then the wave crosses the tunnel. At that point, at that price right there, we knew we would not go back above that purple arrow until after we got one on the opposite side. And the success of that trade is in excess of 90%. It's about 94% of the times when that happens. So I use our scanner to tell me when these trades occur. And I'm not going to teach how to use the scanner because we don't have time, but that's where I start. I then do my analysis on the chart like we've just done, and then have another set of charts where I can set alerts. Now look at this. The wavy tunnel primary indicator has a whole section of alerts that you can set. So this point here, where we had the wave crossing the tunnel, I can set an alert for a lower royal. I can turn that to true. And the alert will tell me when it's time to think about taking profit. And I don't have it set on this chart to do on others where I set my alerts. If I have that set to true, then the alert will go to my mobile device. And I can teach you how to set that up. So if I go away to do the washing up, or I go make myself a coffee or talk to my wife, if the alert goes off on my phone, I know to come back to my desk because it's about time to take profit. And that's using the technology that Wavy Tunnel Pro provides for you and that MetaTrader provides for you to make your trading life as easy as possible. The only thing you have to fight then is your own head, your greed, your impatience, your fear, etc., etc., etc. And I think, Jodie, that's about it. We've run out of time, haven't we?
Yes, so I am going to close this up right now. I'm going to share my screen. And first, I really, really want to thank, can you see my screen? Yes?
Yep.
Okay,
Yep.
I really, really want to thank Juan and Neil for their expert analysis. Imagine working with both of them on a daily basis with Juan to get the wave counts. And Juan has really, really, he's a great Elliott wave counter. And with Neil, who can use the Wavy Tunnel Pro, like it's nothing to him. Neil is an expert at reading any chart at all. So imagine working with the two of them, two expert analysts, mentors, and traders. They're both great analysts, they're both great mentors, great at teaching, and they're both great traders. So today was Forex, and tomorrow we're going to do futures, and Wednesday we're going to be looking at stocks. But I'm going to tell you what, I'm going to show you what we're offering. We're bundling the opportunity to have access to Juan with the Elliott Wave Desk and Neil with the Wavy Tunnel Pro Desk with our tools. We count and you trade. Elliott Wave Desk and Wavy Tunnel Pro membership. Your personal Elliott Wave analyst, strategist, and mentor. Unlock the power of Elliott Wave analysis with expert insights, strategic setups, and personalized guidance. Our membership includes direct access to a dedicated Elliott Wave analyst and strategist paired with your very own Wavy Tunnel Pro mentor and cutting-edge elite tools. And you've seen Juan and Neil in action. So join today and start trading with confidence. And this is what you're going to get. We're offering you a monthly trial for everything for $49, by the way, but you're going to get so much. Not only do you get to work with Juan and Neil on a daily basis, so you can use the Wavy Tunnel to confirm the wave counts or vice versa even, but with the Wavy Tunnel Pro Desk, just reading left to right, you get the advanced training on 6 Wavy Tunnel Pro trade plans and the high probability setups that Neil spoke about with downloadable trading blotter and scanner trade guide. You get the advanced indicator that you saw in action today, and you will be able to scan for all of these Wavy Tunnel setups. You will have access to Neil 4 times a week with 4 London and New York trading and analysis rooms. And I do a weekly room on Mondays on NinjaTrader. And you will be able to join the Discord community. One analyzes Forex futures and stocks in the Elliott Wave desk program daily, where you will be able to see the wave counts. He produces a daily video with live market analysis, and he applies just as he spoke to you today. This is how he speaks to on his daily view on his daily video. So very precise, with ideas, generating ideas every single day for you to trade. Every morning there's a live stream between 8:30 and 9, and Juan produces daily trading plans with explanations. And then he also has Trading Academy. So you're going to learn about Elliott Wave fundamentals to advanced techniques in price action and volume profile, and many, many topics that he decides to teach you about. And of course, there's the Discord community. So what we're offering is a fantastic package. It's $49 for the first month, and the link is elliottwavedesk.com/bundle. I guess we can post it in the chat box. elliottwavedesk.com/bundle, and we hope you check out this page, and we hope that you join us. So that's all for today on Forex. Tomorrow we do futures. Same time, different day, same place. Thank you, everybody, and we will see you tomorrow. And once again, thank you, Juan and Neil.
Thank you.